I actually am starting to bottom fish a little bit because I'm looking at high quality companies, good balance sheets, decent valuations that are getting even cheaper. Buybacks are something I look for a lot. So I'm not looking to buy some of those high flyers, non-earners, Joe. I'm actually looking to buy some just plain vanilla companies, right? I bought a bunch of things yesterday in terms of Schlumberger had a great quarter. They're talking about a super cycle, and they have pricing control. Halliburton, by the way, also said it yesterday when they reported earnings. I bought more Facebook because I think the valuation is very attractive at 20 times earnings. And you're getting about 25 to 30% growth and more transparency in terms of how they're communicating to the street. And I think that's positive, too. And I bought some NXPI, which is a semiconductor that's just gotten pummeled. I think that the auto end market is still very strong and the valuation is very attractive. So I'm looking at quality companies on sale.
The numbers we've seen today, we saw 3M, we saw Verizon about in line. I mean, do you follow GE? It's not even a $100 billion company anymore, is it? Let me just see. Where it is. Yeah, it is. It's $100 billion, but I don't know. It's down today. Did you look at those numbers? Any comments?
Yeah, look, I own it, and I would be buying it. And by the way, I would be buying J&J. I'd be buying American Express, IBM. All four companies had some very encouraging things. Now, GE was messy as per usual. On the plus side, earnings were better. Operating margins were up 280 basis points year over year. And free cash flow, $3.8 billion, got them a total for the full year of 21 at $5.1 billion. If you exclude some discounted items, that cash flow is 5.8. Why is that important? Because they're paying down debt. They're making acquisitions. They want to grow. So they're shrinking to grow. They're going to separate the companies. And I think they're focused on profitable growth for next year. It's a tough environment. Revenues missed and orders missed. So that's the negative for today. That's why the stock is down. I think there were some supply chain issues for sure. But I thought their guidance was very encouraging. So a mixed bag for GE. I get why it's down on the headlines, but I think that there's a lot of great, exciting things to come for this company.
Well, it's a little weird. J&J's down, and you could say, well, the market's down. But then, I mean, American Express, pretty incredible how they're bucking the trend, how it is bucking the trend this morning.
And 18 to 20% growth guidance for next year, and they increased the dividend. I thought they were going to increase the buyback, to be honest with you, but they increased the dividend. That's encouraging. We had kind of cues from J.P. Morgan's card division 2 weeks ago when they reported that they were seeing very significant loan growth. And we know loan growth for American Express, especially on the leisure side, has totally come back pre-pandemic. We're waiting for business to come back, right? And that's going to be the second half 2022 story. In the meantime, it's trading at 16.5 times earnings, and they're doing a lot of good things with their cash for shareholders.